Couple of questions to start with, guys. Can you read a price chart with confidence? Ask yourself that question. If not, would you like to read a price chart with confidence? Because this is me bringing you bite-sized chunks every single week in crypto class. This is the second edition. At the end of crypto class, you're going to understand exactly what's fair value on a price chart. And today we're going to be talking about none other than support and resistance. What is support? What is resistance? What are these sticking points in the market? And how can you use them to your advantage? How do you know when something's overbought? How do you know when something's oversold? How do you know when the markets need to pull back? How do you know when the markets are going to pump? It's all about support and resistance, guys. This is the first step, so let's dive in. Okay, firstly, what is support? What is resistance? Why does the market react to support and resistance the way that it does? And how can we understand exactly where support is and where resistance is? You know me, guys, I'm a Fibonacci man. I'm not going to be bringing Fibonacci into this analysis today because that's going to come later down the line. This is going to be bite-sized chunks, and we're going to go through a simple method on how you can understand what's support and how you can understand what's resistance by just looking at the chart without any indicators, without any Fibonacci tools, just simple support and resistance. That's what we're going to be going through in this video. So this is the tip that I'm going to use, and I urge you to get onto TradingView. It's completely free to use. Get onto TradingView and do this yourself, because familiarizing yourself with the charts rather than just watching my charts, it's going to give you that advantage. It's going to help you because you're going to be able to see the signals that are going to work, and you're going to be able to find out what works for you and what doesn't work for you. You're going to understand that when you get pumps like this, when you get bull pennants, that you're likely to get another push to the upside. You're going to understand when you're going to get exhaustion and you need a pullback. So what I'm going to do is, first things first, guys, onto TradingView, you need to get onto the line chart, click the line chart, and then charts are going to look like this. So the bars are gone, and what the line chart represents is the candle close of each day. So you're getting rid of the volatility to the upside, the volatility to the downside, i.e. the wicks, or the session highs and the session lows. So we've got rid of the volatility, we've got rid of the noise. Now what we're going to do is we're going to go down and pick a horizontal ray. So you pull the horizontal ray up. This is the important thing, guys, and this is easy to do. You're going to understand how to do this yourself if you practice it yourself. So what I want to be doing is looking at how price has reacted previously to certain levels. You can see this key point here. We've had reaction, rejection, come back through before it hit support, and then it was rejected again. So that's going to be a strong level for us, and that level is $46.19. We are at $184.96. Does it mean the price is going to go all the way back down here to $46.19? Could do, guys. It's probably not. We're in a bullish trend now. We're in a bullish trend because you can identify one thing. Putting in higher highs, and we're coming back and we're putting in higher lows. So that's called a trend continuation. Higher highs and higher lows. Let's go through an example of that up here. So just get rid of this. What is a bullish trend, and how can you use support and resistance to your advantage? This is a bullish trend, guys. We'll go through examples. This is a bullish trend. Starting off bottom left, and you're pushing up, new high. This is the important thing. You're putting in a higher low. And then you're coming back, and you're putting in a new high. Then you're coming back, and you're putting in a higher low. The trend is your friend until the bend at the end. So how can you tell when a trend's reversed? When a trend's reversed, you're taking out the previous higher low. That means that if it pulls back, you take out this low, higher low, and then it pulls back again, you're likely to get a lower high at that point. When you get lower highs and lower lows, that's showing that the trend is going to reverse. Now, this is the thing that I want to show you as far as support and resistance is concerned. What happens in a bullish trend, guys? This is what happens. So you put in a new high, that high becomes resistance, you pull back, you get the higher low. That means that a trend's confirmed. You push forward, and once you've taken out this previous high, that's confirming a continuation of trend. So if you've got a continuation of trend, you're looking at the next resistance point for a pullback. Stick it on there, our horizontal ray. Where's it gone? Here we go. You get a pullback, and then you get a pullback back into the previous resistance, which then flips support, guys. So this is called an RS flip, where resistance, previous resistance, flips support. And when do you get RS flips, guys? In bullish trends. So resistance, support, resistance, support. So once you break through resistance and it becomes support, that's showing you that you've got a continuation of trend. Expect a higher high, and then wait for the higher low. So the higher low is the important thing. That's going to determine when you've broken trend, once you've broken and close below here, you've broken trend, and expect the continuation to the downside. So exactly the same thing we can do for the downside. So three types of trend, guys. You've got your bullish trend. This is your bearish trend. Flip it in reverse, top left, bottom right. So we're putting in lower lows, coming back up. We're putting in lower highs, lower lows, lower highs, lower lows. Exactly the same thing, guys. Resistance, support, resistance, support. So you're coming down. The bears are in control. They've hit a support level. What's happened? Tug of war battle happens between the bulls and the bears. Bulls have another turn to fight, and the bulls need to put in a higher high. They don't in a bearish trend. They put in a lower high. So they're putting a lower high. That lower high becomes the new resistance point. So then we break through this previous support, and that's a continuation to the downside in this instance. You put in a lower low, you're coming back, lower high. When's the trend reversed, guys? In this instance, the trend's reversed when you take out the previous lower high. So the previous lower high, then that's signaling that you've got some kind of reversal pattern in, and then the higher low, guys, the higher low signals the confirmation of trend reversal. And once you've taken out that, you're putting a new higher high. That's a trend continuation. So you'll see this time and time again, guys. And I want you to just get on a TradingView and familiarize yourself with these patterns. You'll see reversal patterns like this and inverse head and shoulders, where you've put in a left shoulder. That's a continuation for the bears. Then you've put in a lower high. That's a continuation for the bears. Then you've come back down. You've put in a head. What's that, guys? Still a continuation for the bears. And then this is where things change. You come back up, you've broken the previous lower high, you've put in a new higher high, you've come back, you've put in a higher low, guys. That's the right shoulder. This is a reversal pattern. And once you come through and break the neckline, you can do one thing. You can measure the tip of the head to the neckline, and that's going to be your extension. And that's why head and shoulders is a reversal pattern, guys. It's all about this. It's all about the higher low when you've got an inverse head and shoulders signaling that something's changing. There's a tug of war battle happening between the bulls and the bears at support. And in this instance, the bulls have regained momentum, push price higher. And that's how you can use support and resistance to your advantage, guys. So that is a bearish trend. What's the other trend? The other trend is the trend that will completely wreck you, will completely make you feel boring, or will completely bore you within the space, guys. But these tend to be the best trends as far as accumulating is concerned, guys, as far as building a position is concerned. And this is the sideways momentum. When you get sideways momentum, chart patterns don't play out as much. Remember, guys, it's all about probabilities. Chart patterns don't play out all the time. You can get clues from chart patterns, but when you're in a bullish trend, when you're in a bearish trend, that's the real time to take advantage of chart patterns. When you're in a choppy sideways action, that represents indecision. It represents boredom. It represents people that want to buy and people that want to sell, but there's no conviction either way. And you'll see things like this happening, putting in higher highs, higher lows, hit resistance, then you come back down, take it out, completely wash it all out. And it's up and down and choppy and choppy and choppy. And it's really difficult to trade. However, what you can do with an accumulative phase, and what I love doing in an accumulative phase, I call it my build phase. When you're in a sideways move and you hit in support and you're hitting support and you're hitting support, you can take advantage of accumulating at those low support levels and accumulating, knowing that if you break to the downside, you can still take advantage of accumulating, bringing your average down. So that's why it's important to understand during the build phase, it's the most boring phase. It'll last for at least 2 years. You go choppiness for 2 years. You go up 100%, down 100%, up 50%, down 50%. It's designed to wash you out. But if you're just putting a small amount and a small amount and a small amount at these strong support zones, it can give you such an edge in the market, because if you're in an accumulative phase, a bull run needs to follow. If a bull run needs to follow, it needs to break above the accumulative phase and continue higher. So that's why it's important, guys. So let's keep adding these to Solana. You tell me, guys, can you see any more sticking points on Solana? What about this? Support, come through, resistance, flip support slightly, and then it's come back down, resistance, support. So there's another level. What we're going to do is we're going to add these levels on quickly, and then we're going to bring the bar chart back and see what Solana looks like. Can you see these levels, guys? Am I just putting random lines on here? Can you see these levels? Support, support, resistance, support, 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 support. Flip through resistance, come back down, it's hit support. You can see these time and time again, guys. There's your next resistance level, and then you've got the all-time high. So what we're going to do now, go back on, flip it to the bar chart. And this gives you a clearer picture, guys, because you can see between the support and resistance lines, that's where the build-up of price action happens when you understand what's support and you understand what's resistance, which we didn't at the start of the video. We didn't understand that this was resistance at the start of the video, or this. We didn't understand this was support at the start of the video. We didn't know this was resistance, and this was resistance. So use this simple tool, guys. Add the lines to your chart. When price pulls back to a support, i.e. here, where we're at now, there's resistance, guys. Big resistance, big resistance. It's come back down. It's flipped support. That's showing you one thing. That's a support buy and not a resistance buy, guys. So buy and support and small amounts of capital at those support buys on a higher time frame does make sense to me. So that's why I'm using Solana in this example. We've broken through the previous high. We've come back down. We've tested the all-time high. We've pulled back in this previous build of a price action, which was an accumulator phase for such a long period of time. 80, 240 days in this accumulative range, and then we've broken out and it's tested as huge support. So Solana looks good to me at the moment. But if you did find this useful, guys, let me know in the comments. Have you been putting these lines on your chart? If you have been putting them on your chart, is that giving you an edge in the market, or do you feel that your mind's a little bit clearer by understanding where the support lines, where the resistance lines are? And another thing, guys, you can jump into the free Discord. I'll leave a link in the description below, and you can show me the lines on your chart and we can talk about it. Goodbye from me. I'll see you in the next one. Bye.